we're at the point where the Fed and the Treasury officials, I'm sure, are having to consider a gate, a lock on U.S. bank deposits.
Clients won't be able to sell. They won't be able to buy either. Their accounts will go dark indefinitely.
The world is going to go into a crisis, or a country is going to go into a crisis. It might be the UK, it might be Italy, might even be the United States.
When they go to withdraw money, their ATM will say closed temporarily. When they go to sell stocks, their account will say transaction not available. When they go to their local business, that business will only accept cash if it's open. As citizens realize they're being barred from their money, riots will erupt.
When that happens, I think they will close the banks. You'll wake up on a Sunday afternoon or Sunday morning and hear the news that they've shut the banks, not going to open on Monday. And then by Monday evening or Tuesday, you'll get the announcement that we're having a new currency, the CBDC, and don't worry, it'll be 1-to-1 against the old currency. But there'll be some restrictions.
How bad is it going to get?
Real bad.
It's going to get really bad really quickly. As I began connecting the dots, a pattern emerged. It revealed a network of more than 189 individuals positioned inside the world's major financial institutions. Some of them hold senior positions inside the IMF, World Bank, and every central bank in the G20, including our own Federal Reserve. These elites share one vision, and they're about to make it a reality. That vision is one world order, one world taxation, and one world money. They've worked for years behind the scenes preparing to realize that vision. They've literally rigged the laws of international finance. Everything is basically in place right now, and there's essentially no way to stop this from happening. When the crisis hits, they'll flip the switch, freezing the global financial system. That will give them time to reset the world economy according to their vision.
That is amazing, Jim, really. So what did these elites want from your contact at BlackRock?
Basically, they want to classify BlackRock as too big to fail. The technical term is Systemically Important Financial Institution, or SIFI. That designation normally applies to banks, such as Bank of America. If your bank gets the SIFI label, it means the government will bail you out first in a crisis. But it also means you must turn over control of your bank until the crisis subsides. In this case, they're trying to reclassify BlackRock, an asset manager, as too big to fail. If they succeed, they'll be able to freeze BlackRock when the crisis hits. BlackRock clients won't be able to sell. They won't be able to buy either. Their accounts will go dark indefinitely. And the elite operatives will take control of BlackRock's assets remotely via the internet. But our research shows that their ICE 9 plan goes much, much deeper than that.
Now, you refer to their plan as ICE 9. You just said that. What does that mean?
It's a reference to the Kurt Vonnegut novel, Cat's Cradle. In the book, a mad scientist creates a new form of water molecule called ICE 9. When it comes in contact with other water molecules, it freezes them at room temperature. One drop of ICE 9 can freeze the whole ocean. And that's what these elite operatives are about to do to the world economy.
Now, can you share with our viewers exactly who these operatives are and what their ultimate goal might be?
Like I said, John, more than 189 elite agents have slowly wormed their way into leadership positions across the board. They now sit at or near the head of the IMF, the World Bank, and even our own Federal Reserve. They also control much of what happens at the central banks of China, Russia, India, Brazil, Canada, and Europe. As you know, these institutions form a kind of global superstructure. It forms a kind of snare net encircling all nations. Their leaders aren't democratically elected. They're not accountable to you and me. They're beyond the reach of government and citizens, and yet they hold the fate of the global financial system in their hands. To get a sense of how they operate, imagine an array of floating spheres. One sphere is labeled IMF. One is labeled Fed. One is labeled Bilderberg. One is labeled Wall Street. One is labeled central banks. One is labeled intelligence agencies. One is labeled media, and so on. The elites inhabit all of these spheres, and together the network forms a kind of 3D Venn diagram. As I see it, regardless of what sphere they inhabit, the elites all share the same vision: one world order, one world taxation, and one world money. All of their actions are geared toward moving that agenda forward.
Now, are you able to share the identities of these elites with our viewers?
A short list would include Christine Lagarde, Managing Director of the International Monetary Fund, IMF; Mark Carney, Governor of the Bank of England; Raghuramji Rajan, Vice Chairman of the Bank for International Settlements; Haruhiko Kuroda, Governor of the Bank of Japan; William C. Dudley, President of the Federal Reserve Bank of New York; Agustin Carstens, Governor of the Bank of Mexico; Janet Yellen, Chairman of the Board of the Federal Reserve System; Mario Draghi, President of the European Central Bank; Zhu Min, former Deputy Managing Director of the IMF; Zhou Zhiuquan, Governor of the People's Bank of China; Robert E. Rubin, Chairman of the Council on Foreign Relations. This A-list of central bankers and other elites is just the tip of the iceberg. Of course, not one of these elites will tell you outright what's going on, but I've seen and heard enough to connect the dots for myself. When the next crisis hits, the elites are planning to freeze the financial system, and they'll replace it with a new system, one not based on the U.S. dollar. When that happens, we'll wake up to a very strange and disturbing new reality.
And for our viewers that are watching today, what might their reality look like that morning? How does this manifest?
First, they'll have gone to bed knowing that a massive financial crisis was underway. But when they wake up, they'll find it has worsened and the contagion has spread worldwide. When they go to withdraw money, their ATM will say, closed temporarily. When they go to sell stocks, their account will say, transaction not available. When they go to their local business, that business will only accept cash if it's open. As citizens realize they're being barred from their money, riots will erupt. It's going to get really bad really quickly.
How would such a freeze actually work? And wouldn't that be highly illegal?
Well, it wouldn't be illegal technically because they've been quietly laying the groundwork for years. They've rigged the financial laws, changed the rules of the game to allow this to happen. The stage is set. They have the levers in place. The lights are positioned. Now someone just needs to flick a switch and they'll impose ICE 9 rapidly. And again, all of this will be legal because they've rigged the system in their favor. Here in the U.S., for example, Congress pushed through something called the International Emergency Economic Powers Act, or IEPA. This allows the government to freeze accounts, assets, even whole institutions at will. The only condition is that there's some threat to national security with a foreign connection. Of course, with a global market, every financial crisis has a foreign connection. Any systemic crisis fits the bill.
Wow, that is, you have to admit, that sounds somewhat hard to believe. Now, how could these operatives actually freeze a whole country's financial system?
Well, fortunately, we have some recent real-life examples to study. Look at Cyprus, for example. A few years ago, the Cypriot economy was in trouble, especially the banks. The IMF stepped in and loaned Cyprus $10 billion, but the loan came with strings. Now, pay attention because this is precisely what they're going to do. But imagine it on a global scale. So in exchange for the capital injection, the IMF demanded control over the Cypriot banking system. More specifically, the IMF froze the entire system, literally every bank in the country. And they did that to ensure the IMF's demands were met, including strict capital controls. So how did all of this impact regular citizens? Their local ATMs went dark. Even the bank branches closed, permanently in some cases. Citizens could not withdraw cash. They couldn't even transfer funds from one account to the other. What came next? Wealth extraction on a grand scale. The IMF basically stole 6 to 10% of all the cash in the Cypriot bank accounts. How did the elites justify this? They called it a levy, the price regular citizens had to pay for their government's missteps. Keep in mind, these asset confiscations were done at the balance sheet level with the institutions themselves. They never had to confiscate individual accounts. They froze every account by controlling a handful of the country's biggest banks. When the next crisis hits, we're going to see this here in the U.S. and around the world, and it'll be a highly coordinated global attack on the entire system.
And then on the banks, what do you make of the regional banks right now? Like, how bad is it going to get?
Real bad.
What does real bad look like? We've already taken out 4 banks already.
Okay, let me tell you what real bad looks like, okay? The panacea of the Treasury announcing that all deposits are federally insured doesn't solve this problem. There is capital flight, deposit flight from the banking sector, okay, seeking yield, okay? I fear that just, and I don't say this lightly, but in 1934, the Federal Reserve Act confiscated gold from US citizens. We're at the point where the Fed and the Treasury officials, I'm sure, are having to consider a gate, a lock on US bank deposits. Let me tell you why.
Wait. Does that mean that you're looking for, we're going to confiscate all the gold, or there's going to be universal deposit insurance, or we're going to stop? What does that mean?
Okay.
What's a gate?
Okay, forgive me, right? So a bank is like a hedge fund, okay? And hedge funds, they put a gate, which is say when you want your money back, they go, we'll call you, yeah? If you're in one of these big, huge, super hedge funds, it can take you 2 years to get the money out. And of course, what we discovered with the iPhone, with the banks, the deposits instantly come out. Secondly, why are the deposits coming out? I think initially, in fact, I do even think initially, the money is coming out because CDs, banking CDs were priced at 10 basis points, and the Fed's giving you 500 basis points. And hard-pressed folk are like, you know what? Boom, Apple, boom, money market mutual fund, okay? And what that revealed was the conceit and the arrogance of a kind of cool idea. The cool idea with the Fed was, hey, banks, like, we're the Treasury, we've got a ton of treasuries to sell. What if you hold it in a hold to maturity portfolio and you don't have to mark to market? Just ignore it, it's on us. People are like, yeah, cool, I'm in for that, right? Okay. Nice idea, except when you get the deposit flight, suddenly it's untenable that you can hold the security to maturity and you have to sell it. When you sell it, you reveal the hidden thing under the iceberg, under the sea. The mark-to-mark loss is greater than the shareholder funds. Let's look at Fed data from a Fed paper in March. $23 trillion of banking assets. Of course, that's 1 times GDP, okay?
Hugh,
shareholder funds of
cutting rates.
What?
Don't we just solve this problem? Nice to see you, by the way. Alex is delighted to have you in the studio. Don't we just solve this problem by cutting rates? Then that hold to maturity bucket isn't a problem anymore.
That is wisdom from London. Wow, thank you, Guy. That's what was so off about yesterday. That Jay and the Fed actually aggravated the problem further. They're like, you know, why don't we hike 25 more? Why don't we encourage more deposit flight from the regional banks? It's like, hello, is anyone in?
Hold on a second. If they hadn't done anything and they had said, you know what, we're going to hold tight because the regional banks are having a problem, and they didn't do anything, everyone would have panicked anyway.
Hey, sometimes it's kind of relevant to panic. I would recommend you panic. What I would recommend is transparency and honesty. You know what, folks, I'm speaking to you on behalf of the Federal Reserve. We got a little bit carried away. We raised rates with a magnitude and a rapidity which we regret. We've come to understand that with the profound leverage within our system, that taking rates to 5.25% when debt, I'm approximating, but it's 4 times the size of the economy, I have now surpassed my teen idol. I have now taken rates beyond where Paul Volcker took rates. And now things are breaking, and therefore I apologize, and we're going to bring them down. The good news is, in 90 days, consumer prices are going to be rising only at 3.5%, and probably owing to how I kind of messed up, we're probably going to be looking at deflationary prices next year. So my promise to you is we're going back to ZIRP. This system only lives, it only breathes when rates are zero.
Okay, so when do we get back to zero?
We have to, well, the Fed's not, clearly after yesterday, the Fed's not going to volunteer, okay? And so we adults are going to have to break more things until they recognize it.
What do you think that looks like? Like, we've already broken 4 banks. Looks like 2 are coming under stress. What's the break?
The break is...
Just more of this.
The break is when the deposit flight is so extreme. I mean, I'm sure on Bloomberg you must be pulling up the M2 series,
yeah.
And you've seen the biggest waterfall decline in M2, right? Now, what that means, that M2's deposits is not loans, right? But what that means is that's the deposits fleeing the system and going into money market funds, okay? When that could reach a crescendo where, like I say to you, the Treasury and the Fed may have to come in and actually restrict your right as a US citizen to pull money out of the US banking sector.
Well, the world is going to go into a crisis, or a country is going to go into a crisis. It might be the UK, it might be Italy, might even be the United States, but something is going to happen. Things are very, very taut in the financial world at the moment. When that happens, I think they will close the banks. You'll wake up on a Sunday afternoon or Sunday morning and hear the news that they've shut the banks, not going to open on Monday. And then by Monday evening or Tuesday, you'll get the announcement that we're having a new currency, the CBDC, and don't worry, it'll be 1-to-1 against the old currency. But there'll be some restrictions on your ability to convert your old money into the new money. So if you're poor and you have a small bank account, it'll be converted 1-to-1 straight away. And you'll probably even find that you get a free gift from the government to kickstart the system. Maybe £3,000 or £5,000 will be given to every citizen gratuitously to kickstart the system in the new CBDC. But if you have 100,000 or 1 million in the bank, you're going to be told, yes, it's 1-to-1, but you're going to have to wait to convert it to the new currency. Now, wait means never. We all know that, but they won't tell you that. They'll say it's a temporary suspension because we're in the middle of a crisis. The people are rioting in the streets. And we need to calm the system. So here's some free money, everybody. Go and enjoy yourselves. And by the way, the rich can't convert their money for a while, but they'll be able to do so later. So if you happen to own Apple bonds, they'll be denominated in the old dollars. You won't be able to, it'll still be old dollars. You won't be able to convert those old dollars until you've got the cash. But when you get the cash, you'll need permission to do it. And you're not going to get that permission.